What is a market matrix and what can it do for you? Well, a matrix is made of two main parts. The first part is to do with natural cycles, and the second part is to do with the precision of price and time. And what I'm going to do here in this video is to give you an example of what the matrix can do for you. Basically, the matrix can be used on its own or with any other existing system. So for example, you trade Elliott waves, or you do trend lines and technical analysis, or even GAN. It doesn't matter what you do, matrix is there to help you with the trend. So overall, the matrix can pick up the beginning and the end of a trend and also tell you how long that trend is going to last for. The way it does this is by using multiple different cycles. Now, a cycle is something that repeats, so anything that happens in one cycle will be repeated in the same cycle afterwards. So if this, for a simple example of a cycle, it would be your daily life. You can see here this is Monday and this is Tuesday, and it's from midnight to midnight. So one day is a complete cycle. The next day is another cycle. It's an exact repeat of the first cycle because it's exactly 24 hours in length. Now, for example, in that cycle there are timed events. One of them may be the time you get out of bed to go to work, and let's say that's 6 o'clock in the morning. The same thing will happen in the next cycle. Following day, 6 o'clock in the morning, you'll get out of bed again. And it's a consistent repeating situation. Now, what matters is the cycle to start with. So first of all, we need to see a cycle, which here in this example is 1 day long, and we need to look at timed events within those cycles. Exactly the same thing happens with the stock market. There are specific cycles that are naturally occurring, and within that cycle there are repeating events. So once you see a certain event in the market, you can then predict that's going to be in approximately the same place within the next cycle. So for example, here you had a market turn down, then the following day you'd expect around about 6 o'clock in the morning another turn down. Obviously this is just an example, but it's nothing to do with the actual cycles within matrix, but this is just here as an example. Now let's have a look at this on a real chart. Now here's a blank empty chart, and it's got some points on it. These are numbers. Quite simply, number 1, 2, 3, etc, etc. Now this is within a cycle, so these are turning points within an overall cycle that repeats, as I say, from the past and right into the future. So right at the beginning of the cycle, I've got point 1 down here. When this cycle is over, the next cycle there'll be another point 1, again exactly the same place. Now there'll be a slight discrepancy with a plus or minus a couple of days at a maximum, but even from here, if I say the market's going to come down to here, it's then going to move up towards this time zone, down to this time zone, up to this time, down to this time. Then you know the trend from this point onwards should be up till here, then a trend should be downwards, then a trend should be up, and so forth. Now let's put the actual chart in here. Right, there's the actual chart. This is real data that's really happened. As you can see, we were due for a point 1 as a low here. The market made a low 2 days later. Then it's moved up, so it's trending up now to this point. Then it's pulled back for a couple of days, making this point come slightly early. Then it's come all the way up again. Then it's pulled back towards this and back up again. And this is simple timed events. You can see they're predicted into the future. We've got a point here that's not due for another week or so. And the market has had this point, it's now moving up towards this. So you're already predefining the trend of the market for the next few days. The point that matters here is, are we going to be buying from here to here and selling this? Well, you don't want to sell that because you're going against the bigger trend. So there is more than one cycle in matrix. There's actually 89 cycles in all, although I'm going to show you here the first 4. So this is what we call the MC1 cycle in blue. We need to look at the MC2 cycle if we're going to trade the MC1, because we want to trend in the direction. Okay, so we want to buy here and trade upwards within the direction of the bigger cycle. So what I'm going to do now is I'm going to show you the bigger cycle on top of this. We'll place that cycle in now. There's the points for that cycle. There's just a few of them because obviously it's a small amount of data here. But quite simply, from back here, we knew that this bigger cycle was due in this area. So from here, as the market turns up, we know the trend on a bigger scale is up. You can see the distance between each one of these points is only a few days, but between these is quite a few weeks. So back here, you are able to buy the market on a smaller scale, knowing that the overall trend is up. Hence, each movement up is a lot bigger. And as it pulls back, you can rebuy again, because you know the pull down move is not going to be worth much. It moves up to the next point. and it pulls back, you can buy again, and up it goes to the last point. As you can see, the 0.6 there. Then the bigger MC2 cycle is in, so now we know the bigger trend for this should be down. So again, if we're trading these MC1 points, we want to trade in a short position to sell down to here and then resell here. Now if you want to go to an even bigger scale, so you want a longer term trading, we'll move across. Now this is the Dow Jones Index, right up to the current position we are at the end of March here. Same situation, this is the MC2, and you can see the market's moving up and down between these points. This is just a time zone, so this is the average area of where it's due to turn. Market pulls down, look, it's turning in the average area, pulls up to here, it turns down into that average area, and then it moves up again. But again, we need to know the direction of a bigger cycle to trade this particular market, so we only want to be buying for this, buying this, and buying this. We have no interest in shorting the market. So now we'll have a look at the bigger cycle above this, which is the MC3. There you go, there's the MC3 cycle. So again, looking at it, you can see this is a much longer distance. Look, there's multi-months here. This point here, point 11, you'll see the rules in the matrix book as it tells you everything in the matrix book about this. The 11 was due with one of these 2 points, and it's actually occurred here early, and now the market's going up, and as you can see there is at least 5 to 6 months of upward trending market. And the reason this point has come with this one here, this is explained in the matrix book, but the reason it's come here is because the cycles above this are up, which means overall if a bigger cycle's up, the lower points will tend to come early. So subsequently we can see here, when the market started moving up, you'll be looking only buying the market, basically buying with the overall trend. Hence we would not be shorting it here or shorting it here. Now again, you may be somebody who's trading on even a longer term. You may want to trade something like a pension fund. Well, you want to be going to the higher scale. So let's go to the scale above this. Look at these points here, the 10, the 11 and the 12 in black. This is the MC3. I'll move on to the MC4, but we're going to go on to a much bigger scale now. So look, keep an eye on those points. There they are. There's the 10, there's the 11, there's the 12. These are the ones in the past. And as you can see, this is a time zone for where the market should be turning back down. And as it does turn back down, again this is a time zone for the next point. And then that will move up to the next point. But the issue is do you buy the market on each of these moves up, or are you going to now be shorting the market? Well, again, the matrix will tell you by using the cycle above this. The cycle above this happens to be the MC4. And if I put that on now, there you go. So if you had the MC4 cycle on and you were playing with the MC3 cycle, you could be buying here, then rebuying here, and rebuying here, and rebuying here. And you now know that we're due for a major cycle high point, which is going to have a much bigger pullback. Pretty obvious and pretty straightforward. Every matrix cycle is linked to the cycle below, so whatever you want to trade, whatever time cycle you want to trade on, you need to also put the cycle above on and trade in that direction. That's logical and simple. The matrix book goes through and explains all the different cycles, from the MC1 up to the MC5. I mean, anything above that really you're getting to the sort of length of time where the cycle beginning and ending is longer than your actual lifetime. So even though there's 89 cycles, the vast majority of them we won't be using. But basically it explains every single one of the cycles so you can apply that onto any market in the world, any commodity, any individual stock, any currency or any index. It will also tell you how many of these individual points are within each of the cycle, and it's shown on a number of coloured charts, so you can copy those from there. It will explain all the rules and logic, like I was saying back here, for example, this point here, this is an MC4.4. It has to come with either one of these two MC3 points. We know it is going to come with this one because the bigger cycle above this is up. It tells you when the bigger cycles are up, these lower points will be on time or early, and that's of course with here. So once its point arrived here, we knew there's going to be, look, almost a whole year of upward moving market. So basically the trend was going to be up for at least a year. As I say, all this is explained in the matrix book, as well as more complicated side of price and time analysis. It does not matter whether you're an Elliott wave trader, a technical analysis trader, or even a Gann trader. What matters is matrix cycles. They will tell you where a trend starts, where it's going to end, and for how long it's going to go on for. Subsequently, you can look at this on scales from a few days to multi-years. The choice is obviously up to you now, but matrix will help you in anything. Any trading, matrix can help because it tells you the trend. Good luck with your trading. I hope you liked the video. Might see you again. Bye bye.